So section 35 deals with expenditure on scientific research, and that we know that because government is providing lot of relaxation to the companies if they are investing, if they will invest money on scientific research. So here we will discuss all the rules related to what are the that exemptions. Here means that deduction allowed means exemption is a different thing, deduction allowed is a different thing. That this much as per the law, normal law of accountants, as per the normal law of tax, you cannot deduct that expenditure. But because of this provision of section 35 of PGBP, if you will invest, if the company or SSC will invest some money on scientific and research purpose, then that whatever expenditure it is allowed. So we are going to study the rule that how much expenditure is allowed. It means expenditure allowed means you can debit it in your P&L account. Let's suppose if this is your P&L account. So what you can do, you can show here as expenditure, and what would be the effect? Same thing. I'm repeating that your profit will go down. When your profit will go down, your tax liability will decrease. So that's the benefit to companies. Their tax liability, उनका टैक्स कम हो जाएगा. जब आपका खर्चा बढ़ जाएगा, खर्चा ज़्यादा दिखाओगे आप यहाँ पर, when your expenses will increase, your profit will go down. So this is the benefit to the companies. So now that first in scientific expenditure, first it can be classified into two main types, like in-house and outsider. And in-house, further you can divide it into revenue and capital. And revenue expenditure, you can say that this part we will discuss later on. Contribution to outsider, we will discuss this part later on. We are discussing only about in-house. In in-house, first we have revenue and capital. This is not related to it's related to that in-house expenditure. In-house can be divided into revenue and capital. And now in revenue, it's before business and after business. So research before commencement of business, maximum what you can take the expense. For example, you started business in 2018. So you can take the expenditure of year 17, 16, 15, maximum 3 years before the startment of business. Maximum 3 years you can take. If you, for suppose that company has started its operation in 2018, so before that 3 years you can take. And what's the expenditure allowed? Only expenditure in case of revenue. Remember this thing, we are discussing the case of revenue and before commencement of business. Only expenditure on salary and material are allowed, and nothing is allowed, no other expenditure. In case of revenue, you can only take salary, and from salary you have to exclude perks. You know what is perk, we have already discussed in case of salary, that perks, perquisites, and perquisites means benefits. So you have to exclude perk from salary and material, but this salary and material should be related to the that staff must be related to whom you are paying salary, must be engaged in research and development. Only you can take the salary of those staff who are engaged in research and development program. And similarly, you can take the cost of material which is your company is using for research and development purpose. Okay, and no other, in case of revenue expenditure, no other expenditure is allowed. And now we can move on to the next part, after commencement of business. So after commencement of business, what you have to do, that if company is engaged in the business of biotech research and manufacturing, So whatever expenditure you will incur, 100% expenditure is allowed. For any particular year, that all types of revenue expenditure allowed. Here in before commencement of business, there is a restriction that revenue expenditure should be related to, it's only for 3 year, it's allowed only for 3 year prior to the commencement of business, and it should be related to only salary and material, and that salary and material should also be related to the debt staff which is engaged in research and development program. And same thing, but mm, uh, research after commencement of business, in that case, after in case of after commencement of business, 100% deduction is allowed. All types of revenue expenditure are allowed, but subjected to the condition the business of SEC must be of biotech research or manufacturing. That revenue expenditure after the commencement of business, 100% revenue expenditure is allowed. Here is no limit like salary or material. Every revenue expenditure is allowed, but the condition is that SEC must engage in the business of biotech research or manufacturing. 100% revenue expenditure is allowed. Is it clear? Once again, I am repeating that first we will bifurcate that expenditure in the form of revenue. First, in-house and outsider. Next, you can further bifurcate this in-house, out-house into revenue and capital. And further, revenue you can divide it into before commencement and after commencement. In before commencement, you can take only 3 years. That, for example, if you have started business in 2018, so you can show the expenditure of 2016, 17, 15. It means you can start from 15. So you can show the revenue expenditure of 3 years, and that should be only related, but that revenue expenditure must be related to only salary and material, and here you have to exclude perks. And another condition is that salary and material must be related to what? Research and development purpose. That salary should be related to that staff who is engaged in research and development program, and that material should be also related to that research and development purpose. Okay, it's clear now. In the same revenue expenditure after commencement of business, 100% all type of revenue expenditure is allowed, but subjected to the condition biotech research, or another type of research was manufacturing. Manufacturing. That was manufacturing. SEC involved in approved biotech research or manufacturing. 100% of amount incurred, all types of revenue expenditure are allowed. Now we can move on to the research and for other SEC. See, you can see here it's only for biotech research and manufacturing, 100% is allowed. And after commencement of business, for in-house research, all other SEC, for all other SEC, 100% allow, 100% of amount incurred. So it's not different, it's same, both points are same, you can say, but it was different because prior to the year, before that latest some amendment was done in the Income Tax Act. Earlier this amount was 150, but now it's same. That's why I have bifurcated this amount 100%, because if you will talk about 1920, In that year, this amount was 150%, but now it's 100%. Both amount are same. So I think it's clear how you can remember that. It's very easy way to remember that. Before, after, and after, it's 100%. In this way you can first in-house revenue. In revenue can divide into before commencement of business, after commencement of business. And for biotech firms and manufacturing firms, 100% deduction was allowed related to the revenue expenditure. And for other firms also, for other SEC, other companies, for other SEC, other companies, again 100% is allowed. So earlier, because earlier it was, this amount was 150% was allowed. So it's same, I think. Now we are moving on to the next, capital expenditure. That capital expenditure, because in-house expenditure in your company, you may invest some amount in revenue expenditure. That may be that part of research and development expenditure may be related to revenue, and maybe it may be also capital expenditure. So let's suppose if it's capital expenditure, then what are the conditions? Now capital expenditure, same, further we can divide it into after commencement of business, before commencement of business. And it's very easy here. Now we are talking about capital expenditure. Capital expenditure, again you can divide before and after. In case of in-house, this is related to your in-house. We are not talking about outsiders. Research before commencement of business. So in case of land, nothing, no deduction is allowed if that expenditure is related to land. In case of capital expenditure before commencement of business, and in case of other expenditures, for example, you purchase building, you purchase furniture, 100% amount, whatever you spent, you can show that amount as an expenditure, 100% is allowed. And research after commencement of business. Now after, it's both are same, whether it's after, only one exception is there. The commencement of business, both are same. On land, you can say capital expenditure after commencement of business. In case of land, it's not allowed, and 100% is allowed in case of other. So it's same, both are same. You can see that what is there in case of before, the same thing is there in case of after, in case of capital expenditure.
Sir, your voice is
So
cracking, sir.
now that again I'm repeating here that how you can, will start from where we will start from that further you will divide into main two parts. Now we are discussing this part only, in-house. And in-house you can divide it into revenue and capital. And in case of revenue, you can divide into before, after. And we have discussed, you know, what are the if and buts of before, and what's in case of revenue expenditure, and what are the if and buts of after in case of revenue. And now capital again, you can further divide it into before and after. 100%. In case of land, no. In case of that others, 100% is allowed. In case of that after, in case of land, it's nothing is allowed. In case of other SEC, that in case of after you can bifurcate in the form of same manufacturing and biotech firm, 100% is allowed, or in case of other SEC, 100% is allowed. So it's very simple. In this way you can remember. Now we are going to discuss that part of outsider, that if you have given some money, your company has given some money, for example, let's suppose Reliance Limited has given some money to any outsider, to any institution, to any college, to any company for research and development purpose. So now what are the if and buts of that? So what are the rules under section 35? Now we are contribution to outsiders. That what is the case of outsiders? That if you have given some money to any other institution or to any other company for research and development purpose, then in that case, how much deduction you will get, how much deduction can be treated as expenditure. So to approved university, if you have given to any approved, the here you have to check it out the language of the question, and you have to be very alert while that this type of that situation is given. So you have to check this word approved, where if approved word is there, only then that 100% deduction is allowed. Otherwise, if approved word is not there in that sentence, so it's not allowed. So approved word, you have to be very clear about that approved word. Okay. So if you have given any amount to any university, any research association, any institute, any college, approved, approved, attached, approved everywhere. For scientific research, 100%. Again, same. Everywhere it's 100%. Now, as per the, there was some amendment made in the year 1920. So for the financial year 2021, everywhere it's 100%. Only you have to remember the particular situation where it's allowed, where it's not allowed. So for if you have given any amount to any college, to any university, to any research association that is approved by the government, so in that case, for scientific research, 100% of amount contributed. 100%. Okay, 100% of amount contributed. Okay, and if that research is statistical research or social science research, again 100%. Whether the research is related to scientific research or if it's statistical research or social science research, so again 100% deduction is allowed. Amount contributed, whatever you will give, it can be, you will get the deduction as in the form of expenditure. You can show that amount as an expenditure of your company in your P&L account. That's the meaning of, because the word deduction has different meaning, and the word expenditure is a different word. So now, if you have given to any amount to any IIT, sorry, Indian Institute of Technology, IIT, this is IIT, Indian Institute of Technology, IIT Delhi, IIT Mumbai, IIT Kharagpur. So national laboratory, or to any national laboratory for scientific research person, again 100%. To approved Indian company engage in research and development, again it's 100%. Again it's 100%, same. You can also write over here 100%. Okay, but here you have to remember two important points, that in case of outhouse, that contribution to outsider, that approval of institution is withdrawn to whom contribution is made. For example, if you have your company is given 2 crore rupees to any approved college of Sikkim government, so now you should get deduction for that. But the approval of that college was withdrawn by the government of Sikkim, or that body AICTE, or whatsoever the body is. That body has withdrawn the that approval. So in that case, no impact. You will get the deduction. There would be no impact on. You will get the deduction for that amount, whatever amount you have contributed, you have given to that college or university or to any IIT. So you will get the deduction for that, and no impact. There would be no impact. You will get the deduction. Whether the later on the approval is removed by by the governing body. जैसे आपके कॉलेज का अप्रूवल खत्म कर दिया, तो आपने दिया, आपने जो भी उस यूनिवर्सिटी को रिसर्च एंड डेवलपमेंट के लिए दिया था, आप उसका डिडक्शन आपको मिलेगा. Finally, land and building shall be bifurcated on the basis of FMV, as cost of land is not allowed as deduction. Next, लैंड एंड बिल्डिंग एक साथ मर्ज करके वैल्यू दी हुई है. फॉर एग्जाम्पल, द वैल्यू is common value of land and building is given. In that case, on land it's not allowed. So what you will do, you will bifurcate the value. How you can bifurcate? FMV as cost of land is not allowed. From debt value, for example, total value of the land and building is 10 lakh. And as per the present market, fair market value of the land is 5 lakh. So you will remove this 5 lakh, and 5 lakh, on 5 lakh you will be allowed as deduction. In this way you can bifurcate the value. If, because we know on land it's not allowed, building it's allowed, so how you, and common value of land and building is given, so how you can bifurcate? You can take the FMV value of land and you can remove that value from the total value, and you will, rest of the value can be, you can get the deduction for rest of the